on this webinar. So before we get started, just a few disclosure statements. I want you to take a few moments. The slides are current as of June of this year. Past performance is definitely not a guarantee of future results. There are some forward-looking statements here. There are a lot of hypotheticals and examples. And as you look at some of these, are really just to provide examples of some of the options that you do have while on active duty, and some options that you do have replacing it as well. This is one of my favorite scriptures, and it talks about where there is no guidance that people fall, but in abundance of counselors, there is victory. You have counselors. I know when I was in the military, I like to help my soldiers understand investing. I learned a lot from folks in the military, and then also pursued a career outside of the military. However, unfortunately, most transition service members do not think about or unaware of the three most important financial military decisions before it's really directly upon them. So hopefully at the end of this webinar, you'll be more equipped to make the right decisions for those who are preparing to leave the military. Thank you everyone for being here. I know you could be 1,000 other places, but we thank you for being here. My goal today is not to give you all the right answers, but rather hopefully to plant a few seeds and give you some thought-provoking questions. And also, at the end of it, propose a partnership where I can help you in your planning, that'll help you and your family make the most and best decisions that is very specific to your family. Here's today's agenda. You can look at it. So, besides figuring out where you live, what job or profession you want to do next, or maybe do you work or not work? Arguably, we believe, the three most important decisions you're going to make prior to leaving the military. Should I replace my service members group life insurance? Should I take the government survivor benefits plan? And what should I do with the thrift savings plan? And just as an added bonus, there's some major changes. I'm sure those that are in TSP have been aware of June, but I will make just a small announcement. But before we get started, I just want to take a quick poll just to kind of see who is on here. So if you take a few moments and go ahead and answer. The first question is, are you or your spouse currently on active duty, in the reserves, or National Guard? It's a yes, no, or never served in the military. And it looks like about 71% of those on here are online, are on active duty, and about 30% or a little bit less are either retired or inactive, or you are a veteran. And no one on here has never served in the military. So thanks again for everyone's service. So I do appreciate that. And that was, we've got about 85% of us participated. So I'll leave it on here just a few more moments. Again, one of the most important things about this webinar is I really help you make the right decisions. There was a lot of thought that went in preparation went into this, especially my classmates as they were retiring back in 2016 and even 2015. They had a lot of unanswered questions when they were going through their retirement briefing. So I have had some help from other folks in the military, even some classmates to help prepare this. So hopefully it is informative. But again, about 70% of those on here are on active duty. So thank you for that. And just quickly just share those results there for you. All right, thank you. So moving forward. So while serving in the military, I'm sure most of you took advantage of the military survivor benefits or the service group life insurance plan. In addition, some of you also have additional life insurance plans outside of the military, but we found out that most people do not. So arguably, this is probably the easiest of the topics we're going to be discussing today. When you leave the military, you will have within 1 year and 120 days from date of separation to convert your SGLI to Veterans Group Life Insurance. If you apply within 240 days from the date you separate, there are no health questions. And just as a thought, for those who do have any questions, go ahead and we will be answering that at the end. You can either put them in the Q&A section or in the chat section, but I will be answering all questions at the end. So please stay on board for those questions. So please use the Q&A and the chat function for that. So when you're looking at converting, some of our options is, one of the big things for service group life insurance is there's no health questions asked, again, within that 240 days of separation. So it is an important topic to really take a look at and make sure you're really understanding what that looks like. So your option to convert SGLI is into veterans group life insurance, and it is available at $10,000 increments up to $400,000. I know when I was on active duty, I believe we started with SGLI was about $150,000. So obviously that's increased. VGLI is a 5-year renewable group term insurance policy. The rates increase automatically every 5 years until the age of 80, when it's maxed out at $1,800 per month. You heard me correctly. $400,000 cost $1,800 per month. Once you have VGLI, you can convert it into a permanent policy with other several insurance carriers. So when we really look at it is, one of the best reasons to convert SGLI to VGLI is if you have serious medical conditions, you do not have to be insurable to convert. One of the best options for that. So it's a very good idea to keep life insurance in place, especially if you've had any major medical issues. So because VGLI is available to everyone, with or without good health, smoker or non-smoker, it can be very expensive compared to other commercial alternatives. And I do want to have one last poll before we dig into the rest of this. And this is for those who, everyone on the call has either on active duty. So take a look and see what fits you the best. For those that are or were in the military, what category fits you best? I have less than a year to retirement, 1 to 5 years, 5 to 10, 10 plus years until retirement or leaving service. I'm already retired from the military, or I've been retired for more than 1 year, or I did not retire, but I am a military veteran. So it looks like we're almost done. I'm not going to take a lot of time here. So I do appreciate everyone's participation here. It looks like we got about 85% of us participated. So I'm going to go ahead and end the poll now. And here are the results. So it looks like about 45%, about a 1 year left to retirement. There's about 20% of you are 1 to 5 years. And we have another 15% have retired more than a year ago. And then also 12% retired in the last year. So great. Thanks for those demographics. I do appreciate that. And there we go. Okay, thanks. So moving right along. So when we're looking at veterans group life insurance, this is kind of the age bands. So these are the current rates of the $400,000 of VGLI on a monthly basis. You can see it's very competitive in the earlier years. So with a lot of our clients, we do look at potentially recommending that as a good conversion. But it does get to be extremely expensive in the later years. Actually, interesting story. When I was stationed in Germany as a young lieutenant, a veteran came up to me in a Hanau medical clinic, which is now closed. And he told me, whatever you do not get veterans group life insurance, because when you get to be my age, when you really need it, you can't afford it. I never thought I'd be repeating these words almost 20 years later, but it's so true. And that's not just veterans group life insurance. It really goes for any type of term insurance that you typically will get placed out of it, meaning it gets to be too expensive if you try to carry it. So again, this is a great option if you're not insurable. I would recommend having some type of life insurance in force when you do leave the military. So here's an example of the cost of veterans group life insurance, where we're going to use examples of either a 42-year-old male or female. So in this example, the 42-year-old male buys a policy as they leave the military. They make their first payment on their 42nd birthday. And you can see here that first payment would be $64 per month. And again, it's renewable every 5 years. So that would last for 3 years. So you kind of get the point every 5 years. This is what the total cost would be. Now, in the assumption we're going to use is the average life expectancy of most individuals in the United States are around 84 years old. So that's going to be the assumptions we're going to be using here. So in this case, if he or she would have made a total of $332,000 of payments to get that $400,000 of life insurance. And for those that don't know, life insurance is typically a tax-free event. So that death benefit will pay to your beneficiaries tax-free. So you can see the cost per month ends up averaging about $658 per month. So very inexpensive in the early years. However, if you're going to keep that, and again, there's reasons to keep it or not keep it, and those are all discussions, of course, each individual has to make on their own with their family. So the cost of life insurance for 42, option one is, we're going to go over a couple options here. So the two options we are going to discuss, instead of buying Veterans Group life insurance, we're going to look at option one where the 42-year-old male buys a 30-year term life insurance policy, converts that policy at the 29th year, age 71, to a permanent policy. In this case, we're going to use a permanent policy called Indexed Universal Life, and we're going to keep that policy in force for 84 years. And for those females that are online, the good news is your insurance actually typically would cost less than this as long as you have the same type of health class. And the option two we're going to discuss is we're going to have that 42-year-old male buy a permanent insurance policy from the very beginning. We're going to keep that policy in force until age 84. So here's some terminology, just give you a few moments to kind of read there. Temporary life insurance. Most policies can be enforced for 10, 20, or 30 years. They're very low cost. I love term insurance for a lot of my clients, especially for their temporary needs, like covering the needs of a house. There's a lot of various reasons to do that. Most term insurance policies do not have cash value. So they're worthless if you allow them to cancel or expire. So SGLI and VGLI are term policies. However, Veterans Group life insurance can continue as long as you pay the premiums. And with permanent life insurance, just give you a few moments to read that slide. Some of the highlights are typically from the very beginning, you're going to see it's going to cost a lot more than term insurance. In fact, one of the statistics of term life insurance, Penn State and some other institutions have done studies, and typically only less than 2% of term insurance policies ever pay out. And the reason being is most people outlive that term. I had term insurance when I was in the military. Luckily, I outlived that term, and I'm here to talk about that as well. So, but just keeping that in mind, mostly only 2% of those policies do pay out. There are many different types of permanent insurance policies: indexed universal life, whole life, premium financing, indexed universal life, being your own banker, infinite banking system. So there's a lot of different things with life insurance that is available. We're typically going to be talking today about indexed universal life is one of the policies that we're going to use as a comparison. Typically, the death benefit is guaranteed to pay in the index policy, and the cash value is determined by the S&P 500 stock index. So one of the other big differences is with life insurance, it can be used as an investment vehicle because there is cash value that does accumulate inside these policies. So we're looking at option one. So here again is that 42-year-old male. And the advantage of that mail, again, we're looking at standard non-tobacco, so there are other rates. If you're a tobacco smoker, whether it's smokeless tobacco, in some cases, some carriers allow that to be standard. Other cases consider you being a tobacco user regardless. But in this case, this scenario, we're going to use a standard non-tobacco user. So we're going to be buying a combination of a 30-year term policy. We're going to convert that policy to an index universal permanent policy at the 29th year. So what we're looking at here is that, and the other thing about term insurance, typically you want to look at the policies that you can convert to a permanent policy. Some will allow the conversion for the whole time period. Some will limit for 15 years. So it really depends. So that's something you want to make sure if you're buying a permanent term policy that you understand how long you can convert without showing a proof of insurability or proof of health. So in this case, the example is option one. The total payments were $270,000. Average cost about $535. And of course, compared to VGLI, this is a pretty significant cost savings compared to VGLI. So about a $61,000 savings. Again, we're assuming death occurs at age 84 for this example. And when death occurs, that $400,000 death benefit would pay to the beneficiaries. And this is just for those who like to see figures. You can see how much the term policy cost initially. It was $106 per month. We paid that for 29 years, $36,000. And then at age 71, we converted that policy. It was cost us $1,619 per month. We paid that for 13 years for a total of $233,000. Again, you can see that total there is $270,000. So again, just kind of the breakdown there. You know, as someone who's sold life insurance as a life insurance agent for 20 years, you know, there is a lot of understanding. I like to teach clients about life insurance, how it works, you know, so feel free to set up some time. I love teaching, you know, whether you become a client of mine or you take the information elsewhere. This is one of my give backs to the military community, which I was so proud to be part of. So please take me up on those options here shortly. In fact, I'm going to take a moment here and in the chat, I'm going to go ahead and put in, for those who want to set up a meeting, might need to be getting off early. Give me one moment here. So you'll see my information. There's our calendar link, my phone number, our website. And also, if you actually want to just compare life insurance quotes, you can go to our website, 123-lifeinsurance.com, and take a look at that as well. So coming back. So here's option two. So option two, we look at using index universal life from the very beginning. So we obviously want to pay, we're paying more upfront. In fact, that initial cost here is $299 per month. Which is, of course, much higher than VGLI. Starts off at $68 a month as a 42-year mill. But the important thing is we lock that permanent monthly cost in, and it never changes. This is a guaranteed policy. And again, just looking at straight math, the difference of this total payments, $154,000. So by actually buying the permanent policy from the very beginning, we actually have over $177,000 savings versus VGLI. Again, you have to be insurable. And, you know, we really look at whether you do option one, option two, or some alternative of that. Typically, it is going to be better than Veterans Group Life Insurance just because you don't have to show insurability with VGLI. And remember, VGLI does currently max out right now at $1,800 per month. So the option two, for those who like to see numbers, this is kind of the breakdown. You know, of course, we paid the $154,000. Now, some of the policies we work with actually have a return of premium option. So for those who, you know, you think you may outlive your spouse, or you don't necessarily, you know, want to have this long-term life insurance policy, this actually has a full return of premium, 100% of the premiums at year 20 or 25. And the other neat thing about life insurance, and I do have a lot of clients that like to use this, as a cash leveraging tool where you can borrow against your insurance policy. You can actually use it as a retirement vehicle. You know, again, I can spend an hour or 2 hours teaching about this, but with this particular policy, we assumed either a 5% or a 6% rate of return. This is the cash value that's actually available at age 84. So if you wanted to walk away from the policy, you walked away with $185,000 or potentially $323,000. But the minimum you would walk away at year 25 or 20 would be the premiums you paid into that. So again, when you compare the option where they're getting term insurance from the beginning versus permanent from the very beginning, of course, there's a pretty large tax savings of getting that about $115,000 of tax savings from the very, very beginning. So to sum up, both options 1 and 2 of the commercial insurance alternatives will continually be better options if the individual does live past age 84, again, because those VGLA payments would continue to be $1,800 per month. So this is one topic that is very situational to every individual on here. If you're not married, then this part necessarily is not for you, but I'm sure you have colleagues that have made this decision or are going to make this decision. And this is one of the biggest debates that a lot of folks have is, should I or should I not take the government's survivor benefits plan? It's a huge and costly decision that most transitional members, service members, don't think about it until it's too late to make a thoughtful, informed decision. So I've discovered there's a lot of misinformation and myths out there. Also, your spouse has to be by your side, and DOD recognizes this. So they have to declare in writing your decision. So please involve them early. So believe it or not, a lot of military spouses and service members believe that the retirement check of the service member will continue after the service member dies, even without SBP. Of course, for those that know, that is sadly, military retirement pay does stop. There are some other coverages that carry you over for a couple of months after active duty. But again, this is one of the biggest decisions to take SVP or not. So again, we do have some programs where I like to help my clients or potential clients understand what are your options, what's the cost of SVP long-term, and what are the biggest things to consider when it comes to that. So we do a direct comparison. So another reason for setting up a meeting with me is, or you can go to the website and just kind of get an idea what term insurance costs. I'd love to run quotes to you to show you what your particular insurance would cost to see, you know, what is the right decision to make for you. So there's probably some people in here who have no idea what I'm talking about when it says service benefits, survivor benefits plan. So just take a few moments and read the definition of SBP. So bottom line, this is a way for the military surviving spouse to continue to have some type of retirement beyond that. So eligible beneficiaries under the plan will receive 55% of the retiree's selected amount of coverage, not 100%, but 55% of the military retirement pays coverage. Again, so unlike many private life insurance policies, SBP coverage will not be canceled or revoked due to any illness you may have or age. So whether you retire at 45 or 60, you or your spouse's age or health will never be considered a liability and never impact the cost of the program, which is a great benefit. In addition, the receipt of SVP benefits will not be affected by Social Security benefits as well. And finally, the SVP annuity is protected against inflation, which increases each December with the cost of living adjustment based on the consumer price index. So for nearly all retirees, SVP plan premiums are automatically deducted from your gross pay prior to deduction of federal income taxes. So this, of course, does decrease your total taxable income. And SVP is supplied at no cost for those on active duty or in the reserves as well. Now let's take a look at the biggest disadvantage. So this is where a lot of my clients come to me, and especially one of my classmates when they were looking at SVP and trying to make the decision of, should I get SVP or should I get insurance? And one of the biggest disadvantages is that you can pay into this program for a full 30 years. And if you outlive your spouse, there is nothing left to the estate. No benefit will be paid out unless you were to remarry. So if you both were to die in a car accident, as an example, no payments will be paid. There is an option to include your children, but those benefits do end at age 18 or 22 if they're a full-time student. And yes, the cost is 6.5% of your retired pay, and it is paid monthly. So generally speaking, when you choose SVP, it is an irrevocable decision. However, there is a 1-year window between your second and third anniversary following the first receipt of your retired pay that you can actually cancel it. If you decide to cancel SVP, future enrollment is definitely barred. So let's take a look at an example. So in this case, we're going to look at an example of an 05 retiring with 22 years of service. They will receive, and again, this is probably has changed a little bit, but just for the examples of 63,000, especially with the current inflation rates, is going to be changing. So estimated cost of SVP would be about $342 per month in the first year. If that service member dies in the first year, again, retirement pay about $63K. In this example, 55% of that is about $34,000. And then sadly, Uncle Sam gets to stick their hands into it. And again, we use the 22% example tax rate. So about $27,000 is left over for the surviving spouse. So obviously it's more than what you're used to with SGLI that you're paying while on active duty. But again, it is something that, and those who also work with government or state governments as well, they typically do have some type of SVP, survivor benefits plan options for their surviving spouses. Now this example, we just took this same individual at the 30th retirement year. That means 30 years out from retirement, that individual would be about $112,000. Cost of SVP, $608,000 per month. SVP payout, $61,000 is what that would be at that moment. And again, after taxes. So again, you can see that the one thing with SVP, they did make some changes for those 20, 30 years ago, or even 15 years ago. SVP used to be a permanent, and it used to cost 11% of retired pay. So they've made some adjustments to this. However, the max is 30 years is the most you'd pay for. So after 30 years, you no longer have to make any payments. So in this example, we're looking at what is the cost. So the total cost of SVP paid up at 30 years was $166,000. The average cost was $463 per month. Again, the retiree must die for these benefits to pay, must die first. And if the spouse dies first, there's no benefits left over to the state. And that's one of the main things that for those individuals who do not like SVP and get insurance is because of that reason right there. So what are the alternatives? Again, a lot of my clients come to me, they want to look at what else is out there. Well, life insurance is one of the only other reasons other than you saving your own money and meaning having to be able to, whether it's rental income, passive income coming from another source, we definitely want to look at how are we going to replace that. So I would recommend to not lump the first topic of do I replace SGLI life insurance with do I get SVP or not. I really look at you treating this completely different, because as a future retiree, for those who still have not active, you've served with your family 20 plus years and you've invested yourselves in one of the last known retirement plans in the American workforce, which is the high three or the high three option with the military that it has. So when you look at insuring or protect and preserving, I would definitely recommend to do something. I always recommend to do something. Of course, this is the alternative aspect of it. So in this example, we show a 35-year-old who was doing some pre-preparation, 5, 6, 7, 8 years away from retiring. We are showing a preferred health class in this case. We replace SPT with a permanent life insurance policy of $1.2 million. And the reason we did that is we wanted to get a payout very close to what that 05 was getting. So in this case, we're providing a potential payment at 5% of $60,000 a year to the survivors. And if that death benefit is paid out at 1.2 million, it does pay out tax-free. We could put that into an annuity or another investment. Again, that's where that $60,000 payment is coming in. So in this case, we're looking at costs. The costs are a little bit more. Costs for $210,000 after 30 years. So the cost per month is actually a little bit more expensive. However, remember what the life insurance options of, you can either get your money back, in most cases, a return of premium, or in this case, we show after 30 years that you potentially have about $30,000 more than what you put into it. So if your spouse were to pass away before you, you can use this as an option. You can walk away and you can cash out that policy, or you can continue that policy and leave it to your children, leave it to a church, a charity of your choice as well. So with Index Universal Life, this typical policy provides a death benefit, and again, also that potential cash value, which is super important. So even though this strategy does cost more, we feel it does provide you a lot more benefits, especially if the service member outlives their spouse, or if they, again, you want to leave money to your kids, grandkids, churches, or charities. But to be fair, looking at the cost, obviously the SPP, $166,000, life insurance $210,000. So definitely SPP is less expensive. So obviously that's one of the costs of waiting. If you're in that 40 to 45 or even 50-year-old range, you're going to be looking at paying even more than this. But again, looking at what are the advantages, what are the different disadvantages. And again, the biggest disadvantage, you can pay into the SPP program for a full 30 years. And again, if your spouse dies first, there's nothing left to your estate. Life insurance can always have a benefit that can be switched to other beneficiaries. You can cancel the policy, get your cash value out. We typically say you do have a lot more options when it comes to life insurance. You do have to be insurable. I mean, that's a big topic, obviously, to figure out if you're insurable. And one of my good friends of mine always tells me to remember to tell those on this call is to get your life insurance in force before you start applying for your veterans benefits, your VA benefits. Once you get your VA benefits, that could highly affect your ability to get life insurance in the future, especially depending on what's going to be in your medical record. So I do always recommend that. However, I have had 100% disabled veterans get preferred ratings. It's not always the case. The mental stuff is a little easier to get preferred, but some of the stuff that could be detrimental, like sleep apnea, those are all things that if it's in your records, you're going to be paying more for health insurance. So we typically recommend getting something in force prior to retirement. So here's the same life insurance alternative to take an SPP, but we're using an example of a 44-year-old. We're still getting the same amount of coverage at $1.2 million. We're getting it in this case, we're actually doing a paid up life insurance plan after 30 years. So that means that after 30 years, this individual will no longer have to make any payments. The cost is $1,000 a month. However, again, the advantages where a lot of folks, why they like permanent life insurance is that cash value potential. So in this case, the example is that 5% index credit. And again, there's a lot of time I can spend teaching you about that. But in this case, you're looking at potentially $464,000 of cash value that's left over. So again, you can see the total cost of obviously with life insurance, the longer you wait, the more expensive it is. And those are all things that we would look at in some of my clients that like to get term insurance while they're on active duty. And the moment they get their second job or their next career is when they would convert over to that permanent policy. Again, one of the advantages of life insurance, again, is it does pay tax-free, and you can use the cash value actually as loans. And there's a lot of reasons where a lot of my high income, high net worth clients actually do shelter a lot of their assets in life insurance because there is creditor protection as well. So even though the strategy costs a lot more, it does provide potential a lot of other benefits, especially, again, I can't harp on them more that if the service member does outlive their spouse, or if you do want to leave money to your grandkids. There is an old proverb that says, a wise man leaves an inheritance to his children's children. So this slide shows the comparison of SPP to life insurance alternative. Again, SPP is definitely going to cost a lot less. It does increase every single year based off the cost of living. So in this case, it's definitely a lot less, but then you look at is what is the main option, especially if you look at the life insurance having that potential option. And again, with life insurance, there has to be market participation. So those numbers were not guaranteed. I just wanted to show you those as an example. We have no idea what the stock market's going to do. But we do know that with these policies, the way we build them, that they do have a guaranteed death benefit that will pay, and it will pay tax-free. So again, with both life insurance examples, you can expand the length of time you're going to pay for the premiums to even get lower premiums. So although I showed paying this policy up in 30 years, and other people want to say, hey, can I pay this policy up in 10 years so I can be done paying it? And yeah, you absolutely can. And again, those are all specific questions that we can show examples. So what I like to do with my clients when we do set up meetings is I'll bring up some of our insurance calculators and I'll let you build that plan to see what makes sense for your family. We also, if you've never done it, we do a needs analysis to really figure out, okay, is $1.2 million enough? If you're an 06, or if you're going to work in a second career and you're earning $100,000 from your military pay, plus you're earning $200,000 or $300,000 outside, for those individuals to make that kind of money, which you can. Now you're looking at potentially needing a lot more to be able to protect your family. So again, it's really based off of what your family needs are, and I can really help you make those decisions. So with the life insurance, here's a list of advantages versus SPP. One of the biggest advantages, again, is that the service member, if the spouse dies first, you paid in a program for 30 years, you have nothing to show. You can have multiple beneficiaries and can even leave it to a church or charity. There potentially will be cash available if you wanted to cancel and just get out of the policy, where SPP, you can't cancel it. And if you do cancel it, you can't get back into it. And the cash value grows tax-free, and the death benefit is also tax-free. Life insurance can be used as a retirement income source. I have some of my clients that they don't want to invest in the 401k plan. They actually invest in life insurance, and I can definitely show you some of the advantages of doing that. You can borrow against your policy. I have a lot of clients that like to leverage from their insurance policy, especially in a down market where they can leverage the cash value and actually have their money working in two different places. Very, very unique that only you can do in life insurance. And again, I love to kind of teach you about that. You can cancel anytime, but once you're beyond the 3-year anniversary, you cannot cancel unless there is a death or potentially with a divorce. Your life insurance premiums can be adjustable. So if you get through some hard times, most of these policies have the flexibility where you can stop making payments for those months or years if possible. So what are the disadvantages of life insurance versus SVP? Well, number one, you have to be insurable or in good health. Again, that's why I do recommend you getting some type of temporary policy in place before you leave active duty. That's just part of the planning process, especially before you start applying for your VA disability, because that may affect whether you can get life insurance or not. Are you a smoker? If you're definitely a smoker, costs are going to be a lot higher. What I can definitely say, I've had clients that started off as a smoker. They can lower their rates after a year of being a non-smoker. So I actually have One of my retired colonels is in that position. He's, I think December, he'll be smoke-free for about a year. So pretty excited about that. We were able to help him stop smoking because he can realize how much, not only with the cigarettes, but lowering his life insurance premiums as well. If the service member dies shortly after retirement, SVP payments can be much higher for many, many years because they do include the cost of living adjustment. Life insurance policies could lapse if you stop making payments. SVP payments can never be stopped except, again, for those previous examples. And the other advantage of SVP is the premiums are pre-taxed, where you are paying the taxes on the life insurance. So we highly recommend you definitely do something before you get out. We do recommend taking SVP or taking life insurance alternative, or like some of my clients on this call, they do both. We do recommend at least taking the minimum SVP along with enough life insurance to really replace your SVP payments. Again, this is very situational. I'd love to be able to partner with you. Again, I love teaching, so feel free. In that link, when I do ask some very specific questions as far as how long you're on active duty, what rank you're going to be at, because I want to know what your retired pay is going to be so I can do that free SVP comparison for you. So again, take me up on that. I love helping clients help make that decision. Again, if you take your knowledge somewhere else, I was at least happy to be able to help you with those decisions. Our third topic is, what should I do with the thrift savings plan? Should I leave the money at TSP? Should I take the life annuity option at TSP when I'm ready to retire? Should I take partial, full withdrawals, or roll over my TSP to a traditional or a Roth IRA? So of course you can leave your money invested at TSP. You know, one of the main advantages of TSP, has very low administrative costs. You can keep the money invested. You can manage the investments in there. Of course, you are limited to those 2 interfund transfers per month. And after that, you can only transfer into the G fund. So, you know, you don't have exactly active trading in there that you are allowed to do for those. I know they made some changes to that. If the traditional TSP, if it is traditional, you do, just like any IRA, you have to start taking withdrawals at 72.5. Those are your required minimum distributions. So if you leave it money, typically you're only allowed 1 partial withdrawal every 30 days. And when you do take the money out, a lot of times you have to take it as a full withdrawal. So you do lose a lot of flexibility leaving at TSP. So I do have some clients that want to have a little more control of their money, or you can set up prearranged planned monthly payments out of TSP. The life insurance annuity option, typically they'll go to outside carriers like MetLife or Bright House, and it does give you some different annuity options that TSP will provide to those permanent policies. So again, if you're at that stage when you get there and you want to leave your money at TSP, always consult an advisor to see what else is out there, what other annuity options you do have available. You can only choose one type of annuity payout option if you have both Roth and a traditional TSP. And again, you must have at least a balance of $3,500 in both the traditional and Roth IRA. With the life annuity option, you can choose 2 basic annuity options. You have single life annuity, which is paid only to you. It'll have the highest payout, but ends when you die. This is like the traditional annuity that's been around for a long, long time. And then they also have what's called a period certain, where they'll still continue payments after you die to your beneficiaries for a designated time period. Again, just as a reminder, for those that do have questions, please feel free to use it in the chat or the Q&A section. You have the joint life annuity payout to both of you and your spouse. You can choose between 100 or the 50% survivor annuity option for the surviving spouse. All these different options are explained by TSP. Again, our firm will be happy to show you the difference. Typically, when you include your spouse, especially at the 100% or 50% level, that payout is going to be a lot less to get started with. So if you want to take, just as a reminder, if you want to take a partial or full withdrawal, please remember your withdrawals before 59.5 are subject to a 10% early withdrawal penalty, and it is taxed at your current income rate. You can roll TSP to a separate Roth or traditional IRA where you can manage or have a financial advisor help you with that management. You can roll it into your new employer's 401k, Roth or traditional if it's offered. You can also a 403B or a 457 plan, depending on, if you're working for a school or a church or a charity or a nonprofit. You can roll it into a simple IRA, SEP IRA, as long as it either stays pre-taxed or tax-free, and you do those exchanges, there's no taxes owed on those exchanges. So if you're looking, for instance, for those clients who want to roll it over to working with us and roll it over to one of our investment options, there's no taxes will be owed because we're going to keep it as either a traditional or a Roth IRA. Now, there are some reasons to potentially convert it over. For those that don't think that taxes are going to go up, I really believe at some point taxes have to go up. And of course, when you take money out of a traditional IRA, we don't know what the tax rate is. So we also do work with our clients on plans of converting those traditional IRAs to Roths, especially if we hit a recession and you're out of the military. That's a great time to start converting because you're converting at a lower cost basis. So you won't be paying as much in taxes. And if that doesn't make any sense to you, give me a call. We can definitely chat a little bit more about that solution. So obviously, if you move away from TSP, you do have a lot more investment opportunities. You can just leave it at a bank account, in a money market account. You can do CDs with it, mutual funds, annuities, separately managed accounts, self-directed IRA for those that like to get in real estate. Those are all available that you can roll your TSP into something different. So most of our clients that move away from TSP will go into annuities if they're in their 50s. Separate managed accounts, typically what we offer, either a separately managed account or a brokerage account where we can help manage your assets for you. So again, I'd love to show you some of the options we have that we've helped our clients over the last 20 years. So choosing which of these three options, again, is very dependent on your own situation. Not everyone is the same. When I work with clients, I really look at it as, what is your goal for this money? Are you going to be adding money to it? When do you want to take the money out? When you take it out, do you want to take it out as a lump sum? Do you want to take it out so the money lasts for as long as you're alive? Again, a lot of things to think about when it comes to taking your money out of all of your accounts for that matter. And I'm sure for those that have not seen it, this is just a quick update. Of course, in June, for those who know, there was a mutual fund window that was opened up in the TSP. There are some fees involved with that, $55 annual fee plus the maintenance fee. They do charge a trading fee, and that's a typical trading fee that you're going to pay at most brokerage houses. For those investors that were to work with me, I do absorb the trading fees from my clients that are in our managed accounts. You must have at least $10,000, but no more than 25% of your account value can be in the mutual fund window. If you're not already online, of course, TSP is mobile now. So there's obviously some more advantage to be able to access your individuals. And again, the other cool thing is really the loan ability, the ability to have two outstanding loans. That was a really big change. You can have two general loans or one primary residential loan and one general loan at a time. The repayment can be paid, this has changed as well, either by payroll or a direct debit as well. So in summary, in my closing, my goal today was to plant a few seeds, hopefully give you some questions and hopefully giving you some answers to some of those questions. And also, I'd love to propose a partnership where I can help you in that planning process. Again, in the chat function, I'm going to go post it real quick again, that for those who are just getting online, look at using my calendar link. We'll also be sending up a follow-up text message once we get off here. For those who do want to set up a meeting. But remember, it's never too early to start planning for your transition and retirement from the military. Replacing your benefits such as SGLI, SVP can be less expensive the earlier you start. And most importantly, make sure you make a decision to either take SVP or life insurance in force or both. Several of our clients apply for inexpensive term insurance prior to retirement that they can convert to something permanent at or before retirement, securing their ability to apply and be approved for life insurance. Again, do that prior to your VA disability appointments that you start going through. It is recommended to have life insurance in force before you start your ETS physical, and again, before you start applying for that VA benefit. So just super, super, super important. So what are the next steps? I want to provide everyone with a free analysis of their current situation and what they will look like at retirement. So there is a link to my calendar in the chat. I'll also be sending that link out via text messages as well and via email. I'd love to schedule a 15 to 30-minute phone call or Zoom call to even discuss in more depth. I also provided you the 123-life insurance option if you just want to go look and compare what term life insurance quotes are right now. And you can actually apply online and I can help assist you in that process. But you'll see multiple carriers that are there. In the calendar registration, there are definitely going to be some questions there. That'll help me provide you the free SGLI replacement estimate. Again, it is an estimate because I don't know what your health class is going to look like. And also your survivor benefits plan cost estimates versus life insurance. If you need help with a financial plan now, also consider reaching out and scheduling an hour or more conversation to really get that consultation with you. Again, I love teaching. So please reach out to me. And I want to thank everyone for their time today. I hope this is very informative. Again, we'll be sending you a follow-up text and email after this webinar is over with a link so you can schedule us. We'll also be reaching out by phone. I'm going to be opening up here for questions in a moment, but if you found this webinar useful, tell your friends and colleagues about it. Please share. We will be sending out a recording once our compliance team does approve the recording. So please feel free to share that. So I'm going to go ahead and stop the recording and answer some questions right now. So give me one moment.